The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, welcome to this webinar. I am Devash. Today I am joined by my two colleagues, Pranav and Nick. We are going to present to you today our 2022 industry. There is a lot of background noise. Keep yourself on mute. Participants, please keep yourself in mute. Yes. So uh, before we go into details of our 2023 stock picks, let me just remind us what has happened in 2022. So it has been a tumultuous year. A lot of events have happened in 2022, and preservation of capital was more important than the return on capital. So there are years where you need to play on the back foot and try to preserve the capital, and there are years where you can make some money. I think 2023 is going to be that kind of year where opportunities will be presented to us in creating some wealth. So keeping in this mind, this environment, we have picked 10 stocks which we are going to present to you now. So first, let's look at the stocks which are there on our year-end report. So there is a play on infrastructure which we are betting on. So Pranav, what are the infrastructure related two stocks which we are recommending? Can you elaborate? On mute. You need to unmute yourself.
So the two stocks which we are betting on in the infrastructure, one is Larsen and Toubro, and other one is in the cement sector, which is ACC.
So ACC, Bharat Forge are there. Can you talk about these two, ACC and Bharat Forge?
Yes, sir. So ACC coming under the cement sector. So ACC's buyout of can be a catalyst for cost-saving opportunities, better procurement, logistics, and brownfield expansions, which could drive earnings growth faster than its peers. We feel the growth plan and cost-saving strategies by the new management of Adani will be the key trigger for the stock performance. Also, the upcoming expansion in the central market will boost its volume growth visibility from FY24 onwards. Also, its green power share is expected to rise to 15% in the near term. So ACC has a big scope for improvement in productivity and efficiency parameters, as it is currently lagging a lot of its peers. Also, the synergies between Ambuja and ACC could be realized by the new owners in a better manner. Despite its large size, ACC gets valuation in terms of EV per ton, which is much lower than compared to its similar size peers. So we feel this gap could be bridged gradually. However, some of the key concerns are high input cost, which is the high fuel cost and high pet coke cost, can cause a bit of volatility in its profitability, and also the cyclical nature of the cement stock is a key monitorable to watch out for. Also, the other stock is Bharat Forge. So it is a leading player in the forgings industry. So the company operates in several sectors, including automobile, power, oil and gas, rail, marine, aerospace, defense, and many other sectors. Recently, it has announced a capex of rupees 240 crores in the next few years to exploit opportunities in the defense and e-mobility areas. So the two-wheeler EV associate Top Motors has received FAME 2 approvals. So also the company has won many orders for developing components for electric commercial vehicles in the light truck segment, and the production for the same is expected to start in FY 23-24 onwards. Recently, the company has also bagged orders worth rupees 178 crores from the Defense Ministry to manufacture Kalyani M4 vehicles, and it further expects order in this segment. In aerospace segment, the company has already set the target to reach 1,000 crores by FY23 from current levels of 400 crores. The key concerns for the stock is the cyclicality in the automobile sector. So any slowdown in the automotive sector would be a key risk to watch out for, and also the volatility in the raw material prices is one of the key concerns.
Right. So ACC and Bharat Forge are, yeah. So ACC and Bharat Forge are two stocks which are the first two picks for the 2023. So apart from these two, we are also recommending hydrocarbon plays and refineries in the form of Chennai Petro, IOCL, and Larsen and Toubro. So can you elaborate on why these three stocks should be invested?
Yes, sir. So coming to Chennai Petroleum, so Chennai Petroleum is one of the leading PSU refining companies with current refining capacity of 10.5 million tons per annum, which is located at Manali. The company produces petroleum products, lubricants, additives, and it has also commenced work for setting up a 9 million metric ton per annum grassroots refinery project, which involves an investment of over 31,000 crore at Nagapattinam in Tamil Nadu, which is a joint venture with Indian Oil Corporation. So the company has received environmental clearances from the Ministry of Environment, and also the Tamil Nadu government has passed an order for the acquisition of 606 acres of land parcel adjoining the existing refinery site, which is a positive development for the company. We believe this is one of the key triggers for the stock. Refining fundamentals have remained robust in the near term. Also, the company's average gross refining margin in the first half of FY23 stood at $14.5 per barrel versus 5.75 per dollar in the first half of FY22, so which has almost doubled. So we expect that the gross refining margins could be slightly up in the next quarter. Further, the key concerns for the stock are the volatility in the oil and gas prices, which has been seen in the recent past also, and also any major regulatory changes in the oil and gas industries could be a key concern for the stock performance. Further, the other stock is Indian Oil Corporation. So, as I spoke earlier, it has formed a joint venture with Chennai Petrochemical. So, it is setting up a 9 million ton per annum refinery capacity in Tamil Nadu. So, IOCL and Chennai Petrochemical will hold together a 50% stake, while the remaining 50% stake is to be held by other investors. The company has repaid loans worth rupees 4,600 crore during first half of FY23 out of its total debt obligations of rupees 11,300 crores. Also, it is set to commission various projects over the next 2 years, boosting growth. It has planned a capex of around 28,500 crores in FY24, which was similar to FY23 as it had a similar number of capex in this year as well. So the benchmark refining margin has spiked in the first half of FY23, and so this is likely to benefit most among its peers from an uptick in refining margin, also further supported by robust petchem margins in the near term. So it is expected to add 1,000 outlets and also invest on upgrading its existing outlets in fuel retailing. The company is already setting up an EV charging centers and forming partnerships for various green hydrocarbon. So the key concerns for the stock would be the volatility in the oil and gas prices and any major regulatory changes in the industry. The company's profitability is also exposed to the forex rates, given the business is largely depending on the volatility of rupee dollar index on sales, and also crude procurement and foreign currency loans. Over to you, sir.
All right. So 3 stocks in hydrocarbon area: Chennai Petro, IOC, and Larsen. Apart from the 2 first we discussed, ACC and
Yes.
Bharat Forge. So these are the top 5 stocks from our list. Now let's switch gears and now go towards the infrastructure side. We have stocks like PNC Infra, which is into road construction, and Power Finance, which is increasing the financing towards the infrastructure. So why are we recommending these 2 stocks, Nirmam?
Yeah, sir. So I'll talk about PNC Infratech first. So the company is an integrated infrastructure solution provider in India with more than 3 decades of experience and expertise. The order book as on September 22, it stood over 19,200 crores, and the management anticipates to receive new orders between 8,000 to 10,000 crores during FY23, which gives the company a robust revenue visibility over the next 2 to 3 years. Also, the company is in discussion with potential investors for monetization of its operational projects, and these are expected to be complete during the next 1 year. The government's plan to expand the national highway network by 25,000 kilometers in the current fiscal year is supported by a massive increase in the budget, thus providing a strong outlook for the infrastructure sector as a whole and the company in particular. PNC executes large government projects and hence timely execution and realization of dues remains the key monitorables for the company. For the stock. Coming to the second Power Finance
Oh.
Corporation, PFC. So PFC is the largest government-owned NBFC that provides funding to the Indian power sector. In FY22, the company was conferred Maharatna status by the Government of India, which is the highest recognition for a PSU. So even the power sector outlook for the long term seems bright today. The large liquidity support, proposed reforms, and government's aggressive capex plan will keep the sector on a growth track. Power Ministry has recently given approval to power finance companies to lend to infrastructure as well as logistics sectors. So PFC could lend up to 30% of its net worth to these newer sectors also. The company has sufficient capital adequacy level and has been able to raise funds at competitive rates. We feel that the worst in terms of asset quality deterioration has been done. So a high dividend yield and low valuations provide a margin of safety for investment in the company. However, any fresh formation of bad loans could keep the provisioning high and return ratios compressed for a longer period of time. Over to you, sir.
Right. So PFC and PNC Infra are two infrastructure plays which we are bullish on 2023. Now we also have three more stocks out of our top 10 which we would like to discuss: RCF, State Bank of India, and Zensar. You can take them one by one. Over to you.
Okay. So RCF. Now RCF is a leading fertilizer and chemical manufacturing company with 75% stake held by the Government of India. The company operates two manufacturing facilities with combined urea manufacturing capacity of 2.33 million metric tons per annum. So now, in order to reduce the dependence on imports, RCF along with Coal India, GAIL and FCIL is setting up a coal gasification based fertilizer complex having an output of approximately 1.27 million metric tons of urea. This plant is expected to be complete by September 2024. The company is also working on commissioning a liquid nano urea plant by March 2024 to cater to the domestic urea demand. Apart from this, the energy conservation projects and the industrial products division of the company are expected to aid the profitability, while the high raw material cost, rupee depreciation, and delay in receipt of government subsidy can impact profitability of the company. Coming to SBI. So SBI is a financial conglomerate having presence in almost all the financial products. It has a large and granular deposit base which is backed by low-cost CASA, which is SBI's biggest competitive advantage. So also on the asset quality front, the incremental lending has been done to better rated corporates, while the retail book of SBI is skewed towards salaried class, especially the government employees. So also SBI has many subsidiaries which are performing exceptionally well and adding substantial value to the bank's valuation. So we see a potential for a meaningful narrowing of SBI's valuation discount to its private sector peers. Revival in consumer demand, rise in private capex, and increase in government spending are the triggers for growth. SBI, being the leader in the industry, is amongst the best play on this theme. However, some concerns that can trouble the stock is maybe the fall in net interest margins due to a scramble for deposits, weak performance of its subsidiaries, and high MTM loss due to the rising yields could affect the performance of the stock. Now, we also have recommended an IT play, Zensar Tech. So Zensar is a mid-sized IT software and infrastructure services solution provider and has expertise across the manufacturing, retail, insurance, banking, and financial services sectors. It has operations across the US, the UK, Europe, and South Africa. So Zensar had seen some margin pressure in the past due to its dependence on lateral hiring because of the attrition pressure. However, the company has now improved its fresher hiring program, adding more than 1,000 freshers in half year of FY22 and more than approximately 415 half year FY23. So the management now believes that the margins are likely to improve here on, led by the levers of improved service mix, rationalization of selling general and admin expenses, hiring costs, and improved utilization. The deal wins in Q2 FY23 stood at $142 million, which was down 24% year on year, but up 13% quarter on quarter, with a healthy mix of new wins and renewals. So the healthy order book, a favorable industry demand outlook, provides revenue visibility going forward. However, some concerns that affect this company will be the macro uncertainty in US and Europe at this point of time, the higher attrition rates, visa costs, and the strict immigration norms.
All right.
Yes, sir.
So we are recommending these top 10 picks for 2023. This all 10 stocks are also available on our website through help of small case. So we are building a ready-made portfolio. You decide an amount and you can allocate that amount to this small case. Automatically 10% of the money which you allocate will be invested in all these 10 stocks. We are going to keep this small case open for whole of 2023. It should be available on our website from tomorrow. So now we have two small cases for 2023. One is a large cap SIP small case which we are launching, and apart from that, this 2023 New Year stock pick super pack is also going to be available on our website to be bought as a single click portfolio. So these are the two new small cases which will be launched for 2023 for our customers starting from tomorrow. So these are 10 stock picks, interesting picks we have. The time horizon. So now let me just shift to the question and answer. So depending upon the screen which you are using, there should be a question mark on your webinar screen. If you want to ask any questions regarding this 10 stocks, please ask a question in the chat window. I'll try to collate those questions and we'll try to answer them as many as possible. So first question is from Mr. Apurva. He's asking, what is the time horizon for this stock? So we are recommending these stocks for the year 2023. These are the top picks out of the available stocks. We are also, apart from these, we are going to come out with other investment ideas also. So these are the stocks which we think that has the potential to grow over the 2023. They offer a good margin of safety and has established business models. The valuations are attractive, and that's why we have chosen these 10 stocks. So these 10 stocks are for long-term investments. Vijay B is asking, this is not for short-term trading. And Mr. Ratan Melwani is asking whether the small case will be available. Yes, Mr. Melwani, the small case will be available. You will be able to buy through small case from our website from tomorrow. It is available on our website. Yes, the report which I showed is available on our website. Top picks for 2023. You can look at this report on our website. रेशमा जी is asking, explain in हिंदी. तो हिंदी में मैं 2 मिनट में बताना चाहूंगा कि हम ये 10 स्टॉक आपको 2023 के टॉप पिक्स के लिए रेकमेंड कर रहे हैं. ये हमारे वेबसाइट पे भी अवेलेबल है रिपोर्ट, और आप उसको एक सिंगल क्लिक पोर्टफोलियो की तरह हमारे वेबसाइट से स्मॉल केस की तरह भी ले सकते हो. Many stocks are, yes, so many stocks. Mr. Manan Khosla is asking that some stocks are at 52-week high, or others are at the 52-week C. So can we see upside of more upside in 2023? Yes. So like stocks like L&T, which are still at 52-week high, still has a lot of potential to even perform from here, while many stocks like Zensar are available at a 52-week lows also. So it is not that stocks are available at 52-week high or low that has gone into consideration. We think that from here, if it has potential to give us returns, we have chosen these stocks. These are not for stop loss. If there is any change in the thesis, we will come out with an exit note and alert our investors. So we have not explicitly mentioned any stop losses for this stock, as Mr. Tanmay Joshi is asking. Targets. So we have not explicitly given any targets. These are stocks which need to be buy as a portfolio and hold it for the whole year. At the end of the year, as a combined aggregate return, we will be available to us. Individually, many of these stocks are also under our coverage. We have issued reports on them. So on that report, you can get the individual targets if you are looking for any specific target on SBI or Larsen and Toubro. If you happen to hold any one of them, you can go to our website and check the individual target which are available. PSU stocks, yes. So we had recommended, Mr. Prakash Koper is asking about PSU stocks. So yes, some of them are PSU stocks, and as you have rightly mentioned, and thank you for reminding us, we had come out with many PSU stocks in the past and they have performed well. So we continue to like some PSUs like SBI, which we have recommended. So yes, what is the risk? Risk is that if anything unforeseen happens in this year in 2023, like we saw that there was a big risk and downside happened due to COVID. If any such unforeseen event happens, yes, the stock can go down. So there is always that kind of a risk is there in the market. So do not leverage and take these positions. These are not trading positions. These are long-term capital. If you have and if you want to invest in these stocks, you can go ahead. So if you have joined late, Mr. Parimal is asking, can I repeat the name of these 10 stocks? Sure, I can repeat it. These are the 10 stocks which are available on our website. The report is also available. It will be also available on our small case window. You can see it. The 10 stocks for the viewers who have joined late are ACC, Bharat Forge, Chennai Petroleum, Indian Oil Corporation, Larsen and Toubro, PNC Infratech, Power Finance Corporation, RCF, SBI and Zenza stock. So this brings a wrap to this webinar. Thank you Nirmam and Pranav for joining. I hope viewers this has been useful. Please go to our website and download the report and read if you want to know about more about these stocks. Thank you all for joining.
Yeah, thank you.
We can close this webinar.